Zoom Video continues to operate and put together really good numbers, yet the stock market just does not give Zoom Video a lot of love. Zoom Video announced their earnings today for the first full quarter of 2024, and the earnings were good. I'm going to go through their earnings as well as their fundamentals and do a complete valuation on Zoom Video. In the after hours, the stock is down a little over 1%. So just keeping with the consistent trend that this company was loved during COVID, and now it is pretty much hated by the stock market, at least it seems. Before I jump into my analysis, let me just remind you, I'm an individual value investor, just sharing my analysis on Zoom Video. I'm not recommending you buy the stock. I'm not recommending you sell the stock. I'm just sharing my analysis with you. And this is not financial advice. Please make your decisions on your investments very carefully. Looking at Zoom, I'm going to consider a small cap now because we have multiple trillion-dollar companies now. So at $19.9 billion, this is a small cap. And I think, a valuable company. They have revenue of 4.5 billion. So you're paying 4 to 5 times sales for the company. They're nice and profitable with profit 637 million for the last completed year. Nice low PE of 12.9, even though the company is growing. Analysts say to hold the stock, but it is discounted by 21%. So that's interesting. Over the past year, year to date, the stock is down almost 10%. So the market's been going up and Zoom Video has been going down. When we look at their revenue for the past 10 years, I guess, the company has been growing their revenues. Very good sign. And during COVID, they were just on a blistering pace because everybody needed to get online and either attend school or attend work. So they needed Zoom at that time. What's really impressive is if you look at the current revenue of the company, 4.5 billion, it has held all the growth it took during COVID. So it's not like we went through COVID and this company dropped off. The revenue didn't drop off. They've continued to grow on top of the blistering growth they had during COVID. That's one thing that keeps me in this stock is I think this company is really undervalued because it's a much larger company than it was before, has a lot of customers, and it keeps growing, especially within businesses. The company has tremendous free cash flow. It is a free cash flow generating machine. Last full year, they generated over $1.4 billion of free cash flow. And as I'll get to later in the first quarter, they are growing their cash flows. So all that is good news with regards to the income statement. The balance sheet is superb. They have $7.4 billion of cash, and they have less than that in debt. So net zero debt. They have so much cash that they're buying back shares in a significant way. So this year, they'll be buying back shares and taking shares off the market. Therefore, each share remaining will own a bigger fraction of the company. So that's all positive. As we look at their forecast for earnings per share, the company is supposed to produce about $5.07 in earnings per share for 24, and that's going to grow modestly in the next couple of years and potentially go down in 2027. So not a lot of high growth in earnings per share because it was a big jump from 2023 over to the current year. So earnings per share looks good. I will use those numbers in my valuation when I value the company based on earnings per share. Looking at the first quarter earnings report and seeing what highlights are in the report. To begin with, the company grew their revenue by 3.2%. That's good news. Their enterprise revenue, which is businesses buying Zoom and providing it to their employees, especially big businesses, that grew at 5.3%. That's very good to see. And it was noted that employees just like Zoom better. It has a better experience for them. They're more comfortable with it, and that's why they're growing so much. They repurchased a lot of shares in that quarter, and they still have a lot more cash to use and authorized to buy back more shares. Their free cash flow was higher than expected, and I'm going to use a higher amount for free cash flows. They have a lot of cash on the balance sheet, 7.4 billion. Cash flow was higher in the quarter. So very good to see cash flows really adding up. Their outlook, they reaffirmed their guidance for the second quarter, which should be, again, they're going to grow compared to the second quarter of the prior year. It says 2025 because they have a fiscal year that ends at the end of January. So we're already in fiscal year 2025, year starting February 1st and ending January 31st. The full fiscal year is going to have good growth in the company. And I think they're going to meet or exceed those numbers. So that should all be good. So my grade on the earnings were good. They didn't have, double digit growth, maybe a 20% growth that would have really caught everyone's attention. But I continue to point to the fact that in the COVID years, their business just quadrupled. It just went, parabolic, and they've sustained that business. And that business is reoccurring. The business continues to stay on Zoom to pay the fees they ask for. And the company's generating far more cash each year than it did prior. I'm going to value Zoom by looking at the free cash flows I expect they're going to produce, as well as the earnings per share that I forecast they're going to operate with. To begin with, the free cash flows look fantastic. For the trailing 12 months, plus 5%, they're going to be about $1.5 billion. I'm going to grow those cash flows by 5% in the first 4 years, and that's a very conservative rate. And then anything after year 4 is going to grow up 4%. I'm going to discount all those by 10% since the company is a smaller company. That's a conservative discount rate. And I get a net present value of all those free cash flows of $24.5 billion. I'm going to add the cash, and they don't have any debt. So we get an equity value of $31.9 billion for the company. Their market cap's 19.84. So the stock is being traded at a discount, a 61%. If you look at the value of the cash flows of the company, looking at the earnings per share, it's going to be a really good one. And since it's a growing company and the S&P is at 24, 25, I'm going to go with 18. I'm going to grow those earnings per share by 3%. And I get to a stock value of $94 a share, but shares are being traded at $63.90. So the earnings per share method reveals a 47% discount. So two really good discounts. When I blend the two, I get a 56% blended discount on Zoom. And when I think about it, it all makes sense. I mean, these are tremendous cash flows. The company continues to grow. Earnings per share looks good. So fundamentally, the company is really operating well. So should I buy more shares of Zoom, just hold my shares, or sell my shares in Zoom? Well, I'm going to look at three things: the company, the balance sheet, and the discount available on the stock. The company, do I like the business? Do I like the industry? Do I like the management team? Yes to all the above. I think it's an excellent company. I believe they have the best video conferencing experience of all of them. And they're growing into contact center applications. They're growing in other places organically. And that's a bonus on top of the leader in video conferencing. The management team is excellent. So there's no concern there. And I am completely bought in on the company. The balance sheet's excellent. They have no debt and they have lots of cash. It's a really, really sound balance sheet. So I'm bought in on the balance sheet. And the discount's really high, so much that it compels me to continue to buy shares in Zoom. I have a significant investment in Zoom. And at this point, I'm losing some money. But usually, valuable companies that are misunderstood, it might take a while before the stock rises. But I'm willing to bet that all these cash flows, all these profits at some point are really going to matter. And I think when that happens, this stock price is really going to go up. Hey, thank you for watching the video. I really appreciate it. I'd love to see your comments on Zoom. What do you think of the company? Good or bad? I'd really like to hear what your opinion is on the company, stock price, their Q1 earnings. Thanks again for watching. Good luck investing.